Hey, welcome to the live stream. It is Sunday, August 17th. It's 8 p.m. Eastern, 5 p.m. Pacific. I hope you had a very nice weekend. It was a nice weekend here in Southern California and spent a fair bit of the weekend with family, having a good time. And now it's time to think a little bit about stocks. How's the week gonna go? Last week was really interesting. We had some stocks really rally last week. These were stocks that hadn't been doing all that great for a while, but they finally had an upswing, which was very good to see. Stocks like United Healthcare and others. So I thought we can take a look at those and see if the rally in those stocks is going to continue. I also noticed I'm looking at a heat map here that's for a whole week. So the whole week heat map, and I'm going to go from left to right. Some semiconductor stocks are beginning to catch a little energy. Intel, I think the news where the federal government might invest in Intel, it caused the stock to really rally. Away from Intel, Qualcomm had a good week, up 7%. Moving into software, it looks like Palo Alto had a nice week. Fortinet had a good week. I think this is Block had a good week. Uber, Adobe had a decent week. Amazon had a pretty good week, and that's one of the big caps. So go Amazon. There's a lot of green discretionary. I think the economy is, it caught a few reports that show that the economy is doing okay. So not a lot of force or risks that you see in consumer discretionary unless the economy gets bad. Berkshire Hathaway had a good week. And looks like credit services had a good week. Visa, MasterCard. Moving into communication services, Meta had a decent week, 2%. It's had a really good year. Google had a decent week. Netflix had a good week. And then a bunch of others had good weeks. A lot of green in communication services. Moving over here, healthcare had a good week. It really needed it. Eli Lilly had a superb week, up 12%. AbbVie had a good week. Merck, good week. And UNH up 21% in 1 week. That is good to see because that's a stock that's really gotten more than its fair share of bad news. And other health insurance payers participated in that rally. So Cigna went up, CBS, Elevance. They all did well for a week, but the one that went up the most is United Healthcare. Big news out of super investor land. Several super investors, including Tepper, David Tepper, Warren Buffett, Michael Burry, and a total of 19 super investors own United Healthcare. That's a lot of brain power going into a stock. So I'm optimistic that's going to keep going up. How you doing, Sam? Good to see you. Very good to see you. It was great to have you on the last live stream. Moving away from healthcare, materials had a decent week. Some of the stocks went up. And then from there, it's just some things went down, some things went up in industrials. Energy kind of went sideways. Consumer staples went sideways. Some stocks went up, some stocks went down. Let's take a look at the big caps. What's going on in big cap land? So these are the most valuable stocks on the stock market. Looks like NVIDIA is still having a terrific year, up 34%. Microsoft having a very good year at 23%. Apple down 7%. And there was news that Samsung is eating their market share, just taking market share away from Apple. I guess the Samsung foldable device is really popular. I went from Apple to Samsung, by the way. I didn't get the foldable, but I think the Samsung device is better technology, better performance. So I'm glad I made the switch. Google is not performing up to the S&P. It was doing a lot worse. Amazon, ditto. Meta's having a very good year. Broadcom's having a terrific year. Tesla having a terrible year. And where this stock goes is anybody's guess. I have no idea. Tesla could go up another 50% or it can go down 50%. I don't know because it's not based on valuations. It's based on how popular the stock is on a given month, given quarter. Berkshire is not keeping up with the S&P. TSM having a good week and a good year, excuse me. JP Morgan having a terrific year. Netflix having a terrific year. So big caps. Some of them are just doing great and some of them are falling behind and some are just doing okay. You know, where I've seen a lot of good earnings or good performances, small caps. Small caps have done really well and it's good to see. All right, earnings. Do we have any earnings coming up on Monday? We have Alibaba. This is going to be before the market opens tomorrow morning. I'll be all over that. I'm a Alibaba stockholder. And then in the afternoon, we got Palo Alto. That'll be interesting. So we have a couple of interesting earnings coming up this week. Alibaba, I'm expecting is going to have a good earnings because the China economy has been doing well based on how I've heard other companies report of their business in China. And those are the big names that I see that I'm going to be paying attention to on Monday. On Tuesday, Home Depot, Toyota. I heard Toyota is struggling with the tariffs. We'll see what they report. HDFC Bank, Lowe's, Medtronic, which is a med device company, another bank. And then this is Petróleo Brasileiro, which is the Brazilian petrol company. And other stocks and mid stocks down there. Futu, this one's one of my good performing stocks. We'll see how they announce. Also another Chinese stock. We'll see how they announce. I think they're going to do really well because what they are is they're a brokerage. They're a brokerage in China and surrounding countries. They do brokerage services in Asia. And the markets are just booming. A lot of trading going on. So these companies should do great. So I'm expecting good stuff. XPeng, another Chinese company, car company, EV company. So we've got some interesting earnings coming up this week. On Wednesday, discount retailer TJ Maxx, Analog Devices, Semiconductor, Target, Estee Lauder. This is one of Michael Burry's big bets. We'll see how it announces. Baidu, Chinese company. And those are the ones that I'm familiar with. Finvolution, this is a small cap company that does financial services in China. That is interesting. Zim Integrated Shipping. This one here at times has rewarded investors big time. And we'll see how they announce coming up here on Wednesday. I know a lot of investors that are members of my channel track Zim. So we'll see how that goes. On Thursday, Walmart. Man, we got some good earnings. Walmart on Thursday. Intuit, software company. Ross, discount retailer. Williams-Sonoma, this is a premium retailer. Zoom, this is one of my stocks. We'll see what they have to say. Be watching it. This is a Chinese stock, Billy. And I think those are the ones that I am familiar with. So it's going to be a week with a reasonable number of earnings that are being announced. Unilever, the big consumer staples company, from shampoos to soaps, all the stuff that we have at home. Unilever is a big producer of that. Really nice, stable company. Ubiquity, I think, is a technology company. Not very familiar with it. GMAB, we reviewed this on live streams, and they're supposed to announce on, is it Friday? But it doesn't say before or after. I wonder when. Okay. And that's it. Those are the ones that I'm familiar with. So we've got some interesting earnings. Even tomorrow morning, it'll be an interesting morning because Alibaba is going to announce in the morning. So I'll be reading that and probably create a video on Alibaba or maybe a group of Chinese stocks. I think that'll be a good stock to keep an eye on. I've done well with Alibaba. I think it's had a good year, maybe longer. And I think they have really good upside because they're going to continue to grow. It's a stock that has a huge addressable market. The market that they sell into is massive, and they have a unique way of partnering with vendors in order to get all the merchandise available. They don't have to buy the merchandise, they kind of participate with the vendors. So it's a lucrative way for them to operate their business. Now, their growth isn't breaking any records, but it has accelerated a bit. They can show higher acceleration. I think we're going to see a stock that'll rally. The opposite, if they show deceleration, we got problems. But I think it's going to accelerate. I'm hearing good things from China. I'm hearing that their economy is back on its feet, beginning to grow. The whole tariff thing isn't completely disrupted to them. I think they're dealing with it. I think there was another 3-month delay of the tariffs that were placed on China. So we will see. We will see what information Alibaba provides. I like this stock. It's a good stock. It's a good way to invest in China for me. I also own Amazon and Mercado Libre, which are similar businesses. Amazon being in the US, Mercado Libre being down in South America. So I like holding Alibaba. It's a good one. All right. So we've got some interesting stocks. I've got stocks that I could talk about, but I'd rather talk about stocks you're interested in. If you want to nominate a stock, put it in the chat. If you're a member, it's pretty much included with your membership. If you're not, a $5 super chat. While I'm at it, let me thank the members of the channel who have we've had a good number of new members in the last 30 days. It's really great to have new people involved in the community calls, in the live streams. We're getting far more ideas on stocks, like small caps especially. And we all win when we find out like better companies that are looking great. They're maybe oversold and are going to be great investments going forward. So I want to thank all those who became members the last 30 days. I also want to thank the members who have been members, for a while. I think my first member of this community, this paid program that YouTube started, I don't know when they started paid programs, but I started mine, I guess about 15 months ago. And my first member signed up about 14 months ago. I really appreciate him, as well as kind of like 4 or 5 members have been around for about a year. I really appreciate them. Now we're up to much more than that. So it's great to see many new members as part of it. Great to have you, and hope you're getting a lot of value from it. If you're not familiar with the membership, you could go to the home screen of my YouTube channel and you could see the 3 different options. To summarize it, when you're on live streams like this, you can nominate a ticker. I'll look at it. We'll do a deep dive. You'll get access to my valuation model that you'll probably see on this live stream. You'll get access to my research. If you look at the valuations that I put together, I put that out in a shared folder to members and they can view it 24/7. You also get invited to member calls and you get invited to the Discord where members are talking about stocks each day. So take a look. If it's something that'd be good for you, it'd be great to have you. We had a new member today, as a matter of fact, and I really appreciate that new member. If you become a member, if you're a member that hasn't provided an email to me, please do so. Email me at victorhinvesting@gmail.com, and I'll put that in the chat. And then I can get you signed up for all the perks that you get, including the invites to the member calls, invite to Discord, access to the shared folder, and all the stuff. So I'm going to put my email in the chat So anybody who becomes a member, just email me. It's super easy. I get you all signed up, hooked up, and then you'll be ready to go. All right. So that out of the way, there is some stocks that I thought I could talk about because there's stocks that have been performing really well in my portfolio and on my watch list. One that came out of the live stream about a week ago is CorMedix. It's up 25% in the 7-day. It's up 11% in 2 weeks. It's up 14% over the course of a month. When you look at this company, it is really, really good. So the ticker is CRMD. So let's take a look at CRMD ticker. These guys, they are a biopharmaceutical company, focuses on developing and commercializing therapeutic products for life-threatening diseases. Okay. So they have an antimicrobial catheter. So this product is really doing well. It has great growth. It just went into its commercial stage of, being sold and generating profits and generating revenue and so forth. And so far it's doing fantastic. It's so new that I like looking at the quarterly just to see how it's really ramping up. And this stock has really good fundamentals and a really small cap, 965 million. Year to date, it's up 59%, had a really nice week. 1 year up 162%. And it was kind of just bumping along the bottom. But once it got to the commercial phase of, hey, we're going to start selling the products we've been creating the science behind, getting FDA approval, getting all those approvals, this stock took off. And I think it's going to go up for a while as they ramp up their business. The fundamentals look good. Six analysts cover it. And the most optimistic analysts think it's a $20 stock. That's the price target. Worst case scenario, $12 stock. So not too much downside risk. Collectively, they're at a 30% discount. I have a higher discount than that. So this one here is a good looking stock. It's doing well. It's got good momentum. And I think it's going to be a really good stock to watch. That is CorMedix. Terrific stock. Really neat company. These small caps, we talk about the big caps. They're so popular, but those, if they move up 25%, that's a big victory. If they do about 15% rate of return in a year, that's good. But these small caps, boy, they could really move. They can really increase our wealth, take our capital and move it up 162% over the course of a year. So these are really, really good to keep an eye on. If you buy the right ones, it is the fast lane to growing your wealth. So I love small caps. So that was one that I wanted to highlight. The next one is United Healthcare. Let's take a peek. United Healthcare had a terrific week. A lot of super investors are buying it. It's up in the after hours. It closed at 304. It closed well above its 50-day moving average, and its RSI moved up to 64. This had an RSI of low 40s for a while, and now it's really doing well. Some big investors, really smart investors with teams of analysts have gotten into United Healthcare recently. I think it's a sign that this stock is really discounted and it's going to go up. It was $600 a share less than a year ago, and it was below $300 a share. So my thesis was it's going to move up to $600 a share in the next 2 years. That would basically be, I'm going to double my money. And so far, so good, because the stock's really done well. The 5-day up 21%, and it's beginning to have a positive 1 month. And you see that from August 1st to this point, it's just had a really, really nice run. I think it's going to continue. I think the news is so good. And the valuation is so low on a business that continued to grow revenues. That's a sign that customers aren't leaving United Healthcare. Customers are happy with the health insurance they get from United Healthcare. They're getting more customers. That's what positive growth of about 10% on a massive number, 422 billion. 10% on that number is $42 billion of top line dollar growth. That's huge. That's massive. That shouldn't be lost in all this, cloud of bad news. This business continues to expand. That's a very big positive. I think that's why those super investors are in. They're in on United Healthcare because they're seeing that the market does not have this stock right. The market has it wrong. And I think the market's going to realize that, and it's going to move it back to $600 a share. We'll see. That's why they call it stock investing. It could do it. It could not do it. It could do it over the next 5 years. But we will see. We will be both fans and investors. Next stock that's having a great couple weeks and month, Reddit, up 14% in 1 week, up 31% over 2 weeks, and it's up 70% over the last month. Now that is a real nice rate of return. I'm going to make this a little bigger. Hopefully it can show up a little better. There we go. It's better. I think I was probably making everybody squint. Sorry about that. All right, so let's take a look at Reddit. I don't think I need to tell anybody what Reddit is. You're probably all on Reddit already. And this stock, believe it or not, the market thought, yeah, we don't think Reddit's a real business. It was $2.25 a share back in February. Market sold it off. And guys like me were so excited. $86 for Reddit. Give me those shares. I want to buy. And I certainly did so. And over the last month, this stock's just flourished. This thing is, the market at times is irrational. Sometimes it sells off some stocks and deems them to be kind of like damaged goods, not good, garbage stock. And I look at it and go, I disagree. This is a really good business. They're growing users. It's a platform that I think is a great platform for advertisers to advertise on. So I disagreed, and I disagreed by putting my capital to work here on Reddit, and it's been a really good success. Very good, very good. It's still, now it's a bigger cap at 46, but it's still relatively low compared to the big giant, stocks. $1.67 billion of revenue. It does have a very high PE and a very high forward PE. Analysts think it's priced too high. I agree with them. I think it is priced too high. And I'm waiting for it to come down a bit. I think it's priced too high. It's getting ahead of its valuation. It's growing really well, no doubt. It's a good business, no doubt. It's too expensive right now. It's got to come down a bit. Free cash flows are good. Look at these gross margins, 91%. Those are terrific. But if the stock keeps going up, I'll be a fan and a stockholder. But I'm not going to be a buyer unless it gets below $200 per share. It's just a little too expensive at this level. I'm glad I got my shares when I got them. I will just sit on my gains and wait. But Reddit has been a terrific stock. I don't know how many Reddit stockholders are out there, but if you are, put it in the chat. Let me know if you're a Reddit stockholder. That's been a fun stock because we talked about Reddit on live streams and on member calls. It was a stock that we dug into very, very extensively, along with United Healthcare. And of course, I mentioned CorMedix came out of a live stream. I didn't know about that company until it came up twice. It came up on a member call and it came up on a live stream within 2 or 3 days. I'm like, hey, investors are really paying attention to CorMedix, and I started paying attention to it, started a position there. Another stock that came up on the live stream was Dave. This is a really neat company. I really like everything I've seen with regards to Dave. What's Dave all about? So Dave is in a new way of providing financial services to people that would otherwise go to a bank for different financial products and services. And instead they can go to Dave, which has probably a better way of having a relationship with probably the younger person, the younger adult, providing, things like uh, applications and software for them to stay within their budget, gives them um, financing and a number of different financial services. If you visit their website, I really like their website. I think it really has a different way of providing financial services to people. Banks are not fun to do business with. And I think Dave is giving you an option to have a better experience when you are getting banking services or related services. It's a small cap, 2.7 billion, good revenue. It's growing really well. Look at that growth. Just beautiful numbers. High growth. Year to date, up 131%. Man, that's great. And it's up 462% over the 1 year. This thing is a rocket ship. It has taken off. And I think it's going to keep going. These types of companies, this is like Robinhood, SoFi, Coinbase. They're not reinventing the past, kind of like taking the past and doing it a little differently. They're completely beginning with what does the customer really want? And let's create a business around what should be delivered to that customer. So I like their unique proposition, love their growth, looking at other fundamentals. I like their cash flow, tremendous cash flow. Look at that cash flow, up to $191 million. And it just ramped up so fast. This is a very good sign. They're growing their margins. Very good sign. With scale, they're going to be more profitable. So Dave came up. It's a real good one. And I'm beginning to invest in it. This one here is just taken off. What awesome performance. And they've got the fundamentals behind this, which is really interesting. These small caps are really moving and making it happen. Next stock that's just had a phenomenal month is Futu. This is the Robinhood in Hong Kong, providing what Robinhood does here to people in China, Japan, Korea, and other parts of Asia. These are people that want to invest in stocks. They want to invest in crypto. They want to have options and so forth. And these guys have had a really nice week, up 8%, 2 weeks up 23%, and then for the month up 19%. And Futu is a company that's just ripping the cover off the ball, to use a baseball analogy. Over the year to date, up 117%. And I've owned this puppy for a year and a half or so, up 185%. And the thesis that I have is there's a lot of people in China joining the middle class. And there's a lot of people in China is like big savers. In Asia, they save at really high rates. And I'm sure these guys are seeing examples of, hey, so-and-so invested in Alibaba and made a lot of money. Or they invested in Nvidia stock, made a lot of money, right? So more and more people are like, hey, I want to learn how to invest in stocks. So they go to one of Futu's platforms. Here, you may have noticed Moomoo. That's available here in the States. In Asia, they have another platform. It is called Futu Bull. And that's the big platform in Asia. And the platform's been really growing. Just tremendous growth on a big number. So, like, all these things look good for Futu. The only thing that's bad is the stock's gone up so fast. I think the stock right now, the stock price is too high, a little too high. I'm waiting for that stock price to come down. If it gets below maybe $140 a share, I'd probably start buying again. But for now, I'm just going to sit back and wait for this thing to come down a little bit and just hold my shares, because it's had a tremendous rise. So I'm okay with that, but I'm also going to be wise and It's important to find the right companies to buy. But what's also really important is that you buy at the right times. Wait for the market to sell off a stock, and then we pick it up and get it at a really good price. That's really important. We're trying to make money. Okay. We're not collecting things because we're collectors. We're historians. No, we're capitalists. We're trying to make money. We're trying to grow our wealth. We're trying to buy low and sell high. So when you buy is really important. So Futu is a terrific business, but buying after it's gone up 186% in 1 year, and the fundamentals tell me that it's priced a little too high, is a bad idea. I need to wait for that stock price to come down, and then I'll buy. So Futu's been just a really, really good stock. Qualcomm is showing up. I'm sorting with the best stocks that have had the best week out of the stocks that I track. And Qualcomm's come up. Now, Qualcomm is kind of a value investor's kind of recipe for success. And I say that because this is a very well-known business that has really good profits, cash flows. It's growing. It provides a dividend, 2.26% dividend. Analysts think it's discounted. It's a pretty good sized market cap, 170 billion. And when you look at the revenue growth, 15.8, that's really good for a big business. So their growth is good on a big number. They have really good profit and really good free cash flow. We look at their cash flow, it's really expanding nicely. Over time, it's really grown. It's now 11.6 billion. And that gives me a really good valuation. I value companies on the net present value of their future cash flows. And this one here cash flows really well and generates a really good valuation for this business. Having said that, this one's nicely discounted, and I'm gladly buying more shares. It's picking up a neat little rally. And I think if that continues, boy, that's really good news, because Qualcomm hasn't been rising with like NVIDIA or Broadcom. Those two have risen because the data center business is just really, really growing fast for those businesses. This one isn't in the data center. Qualcomm doesn't make a lot of semiconductors, if any, that go in the data center. So that's why the market said, we don't like Qualcomm because they do great, but we'd rather be in the data center. Earlier in the live stream, I said that Samsung devices are beating the Apple devices. Qualcomm chips are in Samsung's. They are very tight partners. Qualcomm creates a lot of the semiconductors for the Samsung devices. So that is good news for Qualcomm. So Qualcomm had a good week. We'll see if this little rally turns into a nice upward trend. I have got my fingers crossed that that's going to be the case. New Holdings had a really good week. Man, a really good week. They had good earnings, and the companies out of Brazil have had a very good week. This one went up 9% on earnings. They announced after the market closed on Thursday. Then on Friday, it went up 9%. And DLO, which is a payment processor down in Brazil. Hey, Sam, thanks for joining. That is awesome. Let me know what stocks you want to talk about. I've been talking about stocks I want to talk about, but I'd rather talk about what you want to talk about. Please put some stocks on the chat. Thank you so much for being a member. And please get me your email. Just email me, victorhinvesting@gmail.com. I do everything from there, and I look forward to having you on calls and in the Discord and all that good stuff. Back to what I was talking about. DLO is in Brazil. They announced their earnings. Market just threw a party, and they said, no, this isn't an $11 stock. This is a $15 stock. And boom, stock's up 42% in 5 days. What a good week for DLO. This is a Brazilian company. So then our friends at New Holdings announced on Thursday similar good news, which is, hey, we're growing. We're seeing the guidance that DLO provided was real positive. And these guys had really positive news. So looks like the Brazilian economy, at least for a quarter or a couple quarters looking forward, is looking good. And that's all really good stuff for New Holdings and DLO. DLO is a tough one to buy. I don't know how you guys feel, but when it goes up 42% in 5 days, boy, that's a hard one to buy because it's like, well, can it come down a little bit? It feels like I'm chasing that stock. But New Holdings is a different animal because it did have a very good day. But if you look at the year to date, it's up 26%. Boy, this one's had sell offs like it did recently. And I am buying New Holdings shares. I'm already a shareholder, but I own a tiny position. I'd like to buy more shares. I think this one here, I like the exposure to Latin America. And these guys do business in Brazil, Mexico, and other countries like Colombia. And those populations are growing. They have a larger addressable market over time, which I like. So those things are good. Most of my investments are in the US, but it's good to diversify both, across different sectors and industries, and also put a little money in other regions of the world. I mean, Asia, Latin America, and in Europe. I don't put a ton, but I put enough to be exposed to it and to learn. And I've been learning a lot of Latin America. So this one here had a terrific week, and it looks like it has some pretty good days ahead. I'm really happy about that because New Holdings, the market wasn't completely bought in. You see some of these sell-offs. Well, we'll see if they catch a nice rally going forward. New Holdings and DLO had a terrific week, and they kind of carried Mercado Libre up higher as well. You look at Mercado Libre, it had a nice day on Friday. So it picked up a rising tide lifts all boats. So a rising tide in Brazil lifted Brazilian stocks. Mercado Libre its biggest market is Brazil. It's headquartered in Uruguay. It started, I believe, in Argentina. But there we go. So Tim Brown, good to see you. Thanks for joining. So do I think Meta is still discounted? Yes. So I think I could transition to that. So we talked about Meta at length on the member call this morning. We compared Meta with another software company, Adobe. But the short answer is that I think Meta's headed towards $1,000 per share. It's had a very good year. It's had a very good 5 years. Let's take a look at the valuation of Meta. So Meta, I don't think I need to sell anybody on how great their business is. 3.4 billion people log into a Meta app every single day. And I think that the stock is worth $1,022 based on the future cash flows the company has. Okay. This is a cash forecast that I expect Meta is going to produce. The starting point is the company's financial statements. This is what they reported. A growth rate of 10% in year one, and then year two growing at 20%, year three growing at 20%, year four growing at 20%, terminal value growing at 5%. So the numbers tell me, based on the future cash flows of Meta, that it's discounted by 27%. The earnings per share using a PE of 30, which is rational because Meta is growing at more than 20%. That's very good. And it's discounted by 16%. So we see the numbers. Now, that's not the biggest discount in the world, okay? But it's a discount. Now, let's think high level, big picture. The new AI paradigm, right? The new business of AI, it's going to help Meta. I think Meta has the ability to roll out their AI applications to 3.4 billion people that are logging into a Meta app. So if there's a business to be had in the AI side, Meta is going to be building a huge business. They've hired a lot of talent to help them build it. So Meta right now has Facebook, which is a very valuable online media property. Instagram, super valuable. WhatsApp, incredibly valuable. And now if they add an AI business, one more property. And I didn't even include Threads. I didn't include, they have their Oculus or their metaverse business with including the Ray-Ban glasses that have been a hit. So it is a discounted stock. Now, if in the case that we were talking about Meta compared to like Adobe, is Meta gonna like double in the next 2 to 3 years? It's gonna be tough. I think they're gonna have a good rate of return. Now, if you go with smaller caps, you stand a chance to have more accelerated appreciation. But that's what you need to pick is, do you buy now? The stock has been going up a lot. Do you wait for a really strong pullback or crash? I don't know when one's coming, but the short answer is it's discounted. It just doesn't provide a huge discount. It's 23% the way I see it. So that's the answer to your question, sir. Hopefully you found that interesting. For algorithm, what's FTAA? FTAA. You're welcome, Sam. Great to have you as a member. Please email me, and then I'll take it from there. All right. So FTAA. What's FTAA? FTAA Aviation owns, acquires, sells aviation equipment. Interesting. I've never looked into this business. Looks like it's flat. It's having a good year. Having a very good 5-year. Yeah. Looks interesting. Yeah. It looks interesting. If you want me to research it, analyze it on the stream, $5 super chat or become a member, and I'd be happy to do that. We'll get into a full valuation and take a close look at it. All right. So we went over Meta. We talked about Futu. Fortinet. Fortinet's a new stock that I put in my portfolio. It was following a video that I did, and I compared the cybersecurity companies, and Fortinet was the one that had the best valuation and pricing. I used the same logic to buy into Zscaler, and it really worked because Zscaler's up really nice. And then I sold at a big gain and moved on. So this one here, you've seen a real big sell-off, but this company's really grown nicely. So once I did the valuation, this one is nicely discounted. So I started to buy into Fortinet. And, cyber is one of those things that it's, in my opinion, it's not going to be like you don't have a dominant player forever. Like the best cyber company 10 years ago is not the best cyber company today. Like every 5 years, you have a new leader. So whoever's leading the pack right now may not be the leader in like 2-3 years. Fortinet over the last year has had this big pullback, and I think it created an opportunity. Compared to Zscaler, I saw similar sell-offs on Zscaler, and I bought Zscaler at the right time. It flourished. I sold and got out with a really nice gain. Over the 1 year, Zscaler did really well. I'm thinking that may be what happens with Fortinet. That's why I bought it. And the fundamentals look terrific. It provided the best discount out of the pack within cybersecurity. So that's a recent new buy into a new position for myself. And we'll see how it goes. I'll let you know. All right. So let's leave my portfolio and get into some other stocks that look really interesting. Rigel, man, this one here, it did terrific. And you know what? Why don't I do the same thing here? So Rigel has had an incredible 2 months. And this is a stock that came up on the investor calls, not the live streams. We went over this. It has terrific growth, 54% in the full year 24. But now it's accelerating its growth in the trailing 12 months. And this is still a relatively small cap, considering that it's doubled in value over the last month. So this thing was about a $350 million market cap a month ago. And it's just really taken off because that high growth rate has excited investors and they're all over it. I'm all over it. This is a really exciting small cap that came out of the member calls. And this is one that, geez, look at that appreciation. Isn't that a beautiful thing? And it's cool to see a business that has a really fast stock appreciation, but it's really out of results. It's out of fundamentals. The top line growth is growing. These guys are growing really fast. This is a pharmaceutical company. So their treatment, their drug really works, and more patients are taking it. More doctors are recommending it. When you look at the profitability of this business, margins at 83%, gross margins. That's really, really good. Cash flow, positive. So all those things make this a valuable business. This one's been a real rocket ship. Wow. Incredible. Man. And I think it's going to continue because the fundamentals are there. It may have a pullback, but it looks like it's at this point. I mean, we're not even close to opening the market. Tomorrow it'll open at 9:30 a.m. Eastern. So we'll see if it opens higher, but this thing is just getting a lot of attention and a lot of investment. Go Rigel, another small cap that is rewarding investors fast, really fast, right? Doubling your money in in 2 weeks. They're not going to be not all stocks are going to behave that way, but it's always neat to point to one that, look at that one, boy, and they deserve it because the fundamentals are there. The revenue growth is really behind that. Looking at IREN, let's take a look at IREN. That thing is moving. That thing is moving and grooving. So IREN Limited operates in the integrated data center business. It owns and operates data centers powered by renewable energy. Its grid-connected facilities are purpose-built for the power-dense computing applications. The company was formerly known as Iris Energy Limited. So these guys are a hyperscaler, a data center company. Year to date, boom, up 100%. 1 year, up 171%. Terrific. $4.76 billion market cap, revenues at 377. Forward P looks pretty darn reasonable. Fairly priced according to analyst. Wow, look at that growth. Incredible. They are growing fast. So are they a couple of things that we need to check, especially with the data center company, is debt. But first, I want to see margins, and then I want to see cash flow, and then we'll look at debt. So they're not cash flowing. Okay, that's not good. They're actually burning a fair amount of cash. Gross margins, 91%. Looks really good. I think they'll eventually cash flow. I think they're just growing so fast, they have to keep buying technology and putting it in the data center so they can fulfill these contracts they're getting. So gross margins look terrific. Cash flow looks bad. Okay. And then always check your balance sheet, because too much debt, you can have a terrific idea, terrific business, and it goes bankrupt because it has too much debt. This case here has about $140 million of debt. Debt to EBITDA is not a big problem. It's less than 3. So we're good. We're good there. They just got to watch their debt level. Don't get too much debt. Now, when I look at IREN, I think it's priced 33% too high. It's hard to value a company when it has a lot of negative cash. I still created a forecast and did my best to try to give them a reasonable forecast. They're just priced too high. A stock that's making the move is Upwork. I like Upwork because I think they have a business model that's made for the now and in the future. Upwork provides a platform where gig workers can go find work. And these are not employees, these would be more like project based work, and they would take on a project task and get it done. In today's era where you have Uber, you have DoorDash, people delivering on DoorDash to make some money, why not have Upwork where you can sign up and do some project work on weekends? Totally makes sense. The person earning the money likes it because maybe they put their skills out there and certain companies hire them to do specific tasks and projects. They won't be classified an employee, but they'll have them do the work. And the companies win because they don't have to hire people to get things done. They could just be more specific of paying for things that need to be done without having to hire people, carry the employee, benefits, all that good stuff. Now, these guys here have had their stock has moved from 11.75 per share up to 13.80 per share. Their earnings were well received. I think they provided good guidance moving forward. And this stock is on my buy list. I like their business model. I think the business model is going to continue to get bigger and better. It owns a good part of the future, I think. So we'll see where Upwork goes. It's beginning a trend, but it hasn't been like a super winner, up 46%. But you see that it's climbed up and then it's given up a lot of those gains, climbed up, given up a lot of gains. So we needed to climb up and stay up. And this one here may be on its way. Year to date, it's not having a great year to date. 2025 is not in the green yet. But, it's not about where it's been, it's where it's going. This one has provided really good prices to get into this stock. So this one's been a really good one. To entertain, is it a good investment? Not a good investment. Is it a good idea? Not a good idea. It's a really good time to entertain it because it's not overly priced like some of the other stocks I've covered. This one here is in my older son's portfolio that I manage, and I think this thing's going to do well in the future. So Upwork, SoFi. Man, SoFi's had a good month. Now, SoFi is not a stock that I own. I think a lot of people own it. A lot of people that are part of my community own it. I'm glad they're making money. Last month's up 11%, 5-day up 7.456%. It's still relatively a small cap, 28.46. It's not a gigantic cap at $1 trillion. Even Robinhood's above 100 billion now. Interactive Brokers is above 100 billion. So 28.46 seems somewhat low priced or low value. And I mean that in a good way. Like it's not too big. $3 billion in revenue. The PE is a little high. They have good growth, 29%. Looks good. They've been growing year after year. Looks good. SoFi hasn't been my cup of tea because they operate a lot like a bank. And I like and dislike banking. I think it has potential, but it also comes with, I think, some risks. This one here has never been a part of my portfolio. And every time I value it, I just can't get enough value out of the fundamentals, and I pass. I bought things like Robinhood, so it's not like I let one get away. I've done really well at financial services. This one has done great, up 259% over the 1 year. Terrific. Nicely done, SoFi. This is a case of it IPO'd. It got way too expensive, sold off, and now we're getting back to its recent all-time high. But you can see that, I don't buy IPOs. IPOs tend to always do this. They have a really pumped up price and then they sell off. I'd rather just wait for it to sell off, because the advantage is we have more information at this point. They've had many earnings reports. They've reported their financials many, many times. We can get more data. We can really forecast their cash flows better. We can forecast their profits. We can see if this business is really functioning properly and then make a decision. So I stay away from IPOs because they tend to do this kind of stuff. And I can show you a bunch of companies that are good quality companies that did this. Robinhood did this. Coinbase did this. I mean, I can go down the list and show you that I just stay away from IPOs because this tends to happen. Now we're seeing Figma. Boy, that's just abusing stockholders that got in a little late on that stock. So this is Figma. Am I seeing this right? It IPO'd really high, and it's been just kind of coming down. You see that it went up 140% because I think it listed at like $33. And investors are like, oh man, this is great. But if you bought at 122 and you're sitting at 79, that's not great. That's pretty awful. So I don't participate in IPOs. I don't care how good the business is. And I don't think this business is like going to change the world. I think it's a decent business. It's a good business, but not worth chasing an IPO over. All right. So that is Figma. What other stock look interesting? Live Nations had a good month, good week last week. All right. So I think we covered a good number of stocks. Let me check the chat. Real quick check on the market. Where are we at with the market? The Dow, the markets are supposed to open a little higher, but there's a lot of hours between now and the open. Some negative news can come out and then kind of take this to the red. We'll see. I think we are in an expensive market. The market, we have seen the stock market flourish. And I think we are just operating with an expensive stock market. That's just a reality to me. If we have a pullback, that wouldn't be a surprise. It might even be a good thing. Pulling back, getting rid of some really exuberant stock prices might be a good idea. Might be a healthy thing. Might be to use an analogy, we need to take some medicine because these stock prices are too high. We had a real good correction in April. We had this pullback in 23. These pullbacks are natural. They're supposed to happen. And it's been a little while since we had a really, other than this one, I think getting another one here in August, September, October is probably going to happen. And that might open the door to get into some of these companies that we really like, but get in them the right way at a good price where we are getting very good pricing and stand a good chance of making a good appreciation rate. So we'll see. We'll see how things shape up, but I think that we are in an expensive market. All right. So I wanted to stream on a Sunday evening. I don't do this all that often. I pretty much kind of take weekends off and just relax a little, but I wanted to stream on a Sunday, and I'm glad I did so because saw Sam. It's great for you to become a member. Thanks so much. And I saw some other names, but I think that'd be a nice little stream here. I'm going to try to stream in the morning. I'm going to stream at beginning at 9 a.m. Eastern, 6 a.m. Pacific. I'll probably cover that Alibaba earnings announcement, and cover that, and then other things that are going on. Probably stream for about an hour and 15 minutes, hour and a half. So if you'd like to join me then, that'd be great. If not, if you're a member, email me, contact me on Discord, and we'll communicate that way. All right, everybody. Have a nice evening, and thanks for tuning in.